All right, it's that time again. Good morning, good morning, good morning. Good grief. All right, everybody. It's that time. Time for the pre-market PulseScan with yours truly, Dex the Algo Capitalist, aka the Vulcan, coming to you live from PulseWave Trading. Right now on our homepage and throughout the morning, we will be adding new content, new tutorials, especially for all the new subscribers. We have some new tutorials for you, some amazing stuff that we are working on getting up on the site this morning. And welcome back. I warned you last night in last night's emergency broadcast. I told you that we were going to be waking up to dawn of the dead, day of the dead, night of the living dead. You fill in the blank. That's where we are right now. I'm about to show you something that's going to blow you away. Now, remember, things were bad last night, but they weren't that bad. Well, now they've gone bad. There is not blood in the streets. There is an ocean of blood in the streets. Take a look here. As I am speaking to you now, I have not seen moves like this since 2011. Silver is down 2.25 points right now. For those that do not understand that, silver is down $2.25 an ounce. Silver has not moved that much since 2011. It's been about a decade since silver has had those types of moves. And we're doing it to the downside. Do you understand what is happening right now? Gold is down another $60 as we speak. The U.S. stock indexes are still lock limit down. They have not moved all night long. Bitcoin is now down $660. We're at the 4,665 handle. Crude oil is now down $2.57. We hit a low so far of $28.77. Yes. CNBC this morning, the commentators, they're hilarious, man. They have lost all credibility. They're on there panicking. They need to close the markets. Close the market. Oh my God. Oh my God. Oh my God. The Dow is called to fall 2,000 points at the open. They're being pressured to close the market, which is the worst thing they can do. We have not closed the market since 9/11. They closed the markets for a week thinking that they were going to stop something. They stopped nothing. When they reopened the market, the Dow crashed for an entire week and fell 1,500 points, which was a massive amount of points for back then, especially when you were dealing with a 10,000 Dow. Yeah, huge moves. They need to not do that. If they do that, they're basically telling the world, hey, we've lost all confidence in our markets. We're no longer in control of our markets, and we're doomed. That's basically what they would be saying to the world. So they best not do that. The world is panicking. There are some ETFs that are going to open up down such a percentage, I dare not even say it. I can't even speak it. I can't even bring myself to tell you, I don't want to hurt your feelings. I don't want to hurt your feelings. I don't want you to panic. I don't want to cause anyone to puke all over their expensive computers and expensive smartphones. These things are expensive. I don't want you to vomit on them. You destroy it. You don't want to destroy your equipment. All right. They can't blame a fat finger on this one. However, I do have to report something. I have so much to report to you this morning. I have no idea how long this thing is going to run this morning. I normally like to run between 9 and 9:30 and then end it so people can go put their trades on, get their tickets in, blah, blah, blah. But so much is happening right now. I can't just be in and out. I can't hit and run. I gotta stay with you a little bit. I gotta hold you afterwards. I can't just hit and run. You know, I gotta hold you a little bit and tell you everything's gonna be okay. You know, I gotta do that part. All right, so this is what I call dastardly. This is how you know that this is a coordinated effort against you personally. This is against you personally. Everyone under the sound of my voice, you are being disrespected and attacked personally. The next piece of news I'm about to give you is absolutely despicable. Are you ready for this? The Department of Health and Human Services was hacked this morning. Who in the world would hack the Department of Health and Human Services? What type of a sick individual would do that? So now they want to take away the very means of survival for the poorest among us. Those people who are living hand to mouth, dependent on food stamps and Medicaid and a whole bunch of other things. They want to take that away from them. You're basically saying, I want to starve women and children, especially children. Not to mention special needs children, because that's what you're doing. I've never heard anything so gross in all my days. It's one thing to hack, NASA. I'm not saying to do that, or hack Area 51 servers or something crazy like that, but not hack the Department of Health and Human Services. Really, you want to make it impossible for those people to eat or use their EBT cards to buy food for their babies? That is disgusting. This is where we are. This is what's going on now. Absolutely disgusting. So this is where we are. All right. This is an attack on you, the American people. It's a smack in the face to our veterans. All right. So you got widows, all right, out here taking care of infants who lost their husbands fighting for the country, who, due to no fault of their own, have to be dependent on this, and you want to take that away from them too. So now you're spitting in the face of your own veterans also. Remember that's what you're doing. Absolutely ridiculous. It's one thing to panic and run to the stores and try to buy everything off the shelf, being selfish and only thinking about yourself. That's one. I mean, that's bad enough. But now you want to take away from the poor and the needy and the defenseless and the elderly and the sick. What are you going to do next? Go and blow up a hospital full of children fighting with leukemia? What are you going to set fire to the leukemia floor, the cancer ward? What kind of foolishness is going on here? People are insane, and they have lost their minds. I understand everyone's scared about the coronavirus. I understand that they are, closing schools and closing all types of federal buildings and all. I understand all that, but that is no reason to go looting and robbing and stealing and just being destructive and causing harm to your fellow man. That is absolutely uncalled for. It is insane and it is stupid. I don't want to hear any more of that. I really hope I don't see any more breaking news like that. That just breaks my heart to see stuff like that. At times like these, people should be pulling together, encouraging one another, not out there trying to take away from those that are the most vulnerable among us. So anyway, I had to get that off my chest. All right, now this is a very important article that one of my clients brought to me this morning, and it was just so happens that I was perusing news and things of that nature. But this right here is really messed up. But it does make you say, All right, here we go. You ready? Vladimir Putin unleashes strategic hell on the U.S. They believe that Putin is behind what is happening with crude oil and OPEC. They believe that his move was a calculated chess move to break OPEC and then watch Mohammed bin Salman break OPEC. That was Putin's move. That's what he wanted to do. And by doing so, in less than a week, he has completely shut down the U.S. financial system. On Friday, March the 6th, Russia told OPEC no. By Wednesday, the 11th, the Federal Reserve had already doubled its daily intervention into the repo markets to keep bank liquidity high. By noon on the 12th, the Fed announced a $1.5 trillion in new repo facilities, including 3-month repo contracts. At one point during trading that day, the entire U.S. Treasury market just collapsed. It went bidless. It went bidless. No one was willing to buy. There was no one out there making an offer for the most liquid, sought-after financial assets in the world. Why is that? Prices were so high, no one wanted them. Not only did we get a massive expansion of the repo interventions by the Fed, but it was for longer duration. This is a clear sign that the problem is nearly without an end. Repos longer than 3 days are in this context a rarity, like trying to find the Easter bunny on Christmas. The Fed needing to add $1 trillion in 3-month repos clearly means they understand that they are looking out to the end of the quarter as the next problem and beyond that. It means, in short, the world financial markets have completely seized up. And worse than that, their plans didn't work. Stocks continued to slide. Gold and other safe haven assets were hit hard by a reversal of capital outflows from the U.S. In the first part of the aftermath of Putin's decision, the dollar got whacked as European and Japanese investors who had piled into U.S. stocks as a safe haven sold those positions and brought the capital back home. That lasted a few days before Christine Lagarde put on her dog and pony show at the European Central Bank and told everyone she didn't have any answers other than to expand asset purchases and continue doing what has failed in the past. This touched off the next phase of the crisis where the dollar began to strengthen. And now, guess what? As I already showed you in the overnight markets, the U.S. dollar was down over 100 pips. That's right. Euro yen down 217 pips. Massive moves for these markets. For markets that do not historically move like that. And I just got an alert on my trading platform. And I quote, based on the market regulations, the following circuit breaker rules will apply for today if met. Based on the SPX prices, level 1, 7% decline, 15-minute trading halt. Level 2, 13% decline, 15-minute trading halt. Level 3, 20% decline, trading suspended for the day. I suspect the market is going to try to make that happen. I suspect the market is going to go ballistic at the open. This is absolute carnage that we are witnessing. Straight up and down. This is unbelievable. Now, this touched off the next phase of the crisis where the dollar is weakening, as I showed you. And that Vladimir Putin understands that a world awash in debt is one that cannot withstand the currency needed to repay that debt rising sharply. That puts further pressure on his geopolitical rivals and forces them to focus on their domestic concerns rather than the ones overseas. Now, for those of you who are not aware of this, U.S. meddling in foreign affairs, their foreign policy and or lack thereof, has been an issue for a very long time. There are people who have argued and truly believe that there was a good chance that somewhere down the line that the U.S. would eventually turn inwardly because of some sort of crisis. So the question is, are we in that crisis? That is the big question. Have we met those parameters? I'm going to tell you this. I don't remember ever. I don't remember in my day, in my lifetime anyway, the Fed cutting a full point. Normally, it's a quarter of a point. In more extreme situations, it's a half a point. And on the rare, I mean like unicorn rare, you might even get a 3/4 basis point. But I don't ever remember ever a full point basis cut in the markets. Now, it should be noted, for years, Putin has been begging the West to stop its insane meddling in the Middle East and across Asia. He's argued eloquently at the UN and in interviews that the unipolar moment is over and that the U.S. can only maintain its status as the world's only superpower for so long. So he told me, he said, it's over. America's unipolar moment is over. The age of man is over. Now is the age of the org. That's what he told the UN. All right. Eventually, the debt would undermine the U.S.'s strength, and at the right moment would be revealed to be far weaker than it projected. This doesn't set well with President Trump, who believes in America's exceptionalism and will fight for his version of America first to the last, using every weapon at his disposal. The problem with this never back down attitude is that it makes him very predictable. Trump's use of sanctions on Europe to stop the Nord Stream 2 pipeline was stupid and short-sighted. It ensured that Russia would be merciless in its response and only delay the project for a few months. Trump was easy to counter here. Sign a deal with Ukraine, desperate for the money, and redirect pipelaying vessel back to the Baltic to finish the pipeline. And with natural gas prices in Europe already in the gutter from oversupply and a mild winter, There isn't much time for money lost in the end. Better to take the world oil price down well below U.S. production costs, which ensure that Trump's prize LNG stays off the European market as the myth of U.S. energy self-sufficiency vanishes in a puff of financial derivative smoke. Now, Trump is facing a market meltdown well beyond his capacity to fathom or respond to, while Russia is in the unique position to drive costs down for so many of the people while riding out the shock to the global system with its savings. Because money flows to where the best returns on it come, high oil and gas prices stifle development of other industries. Lowering the oil price not only deflates all of the U.S. inflated financial weapons, it also deflates some of the power of the petroleum industry domestically. This gives Putin the opportunity to continue remaking the Russian economy along less focused lines. Cheap oil and gas means lower return on investment in energy projects, which in turn opens up available capital to be developed in other areas of the economy. Putin just told the world he's not riding his country's oil and gas resources like a cash cow, but rather as an important part of a different economic strategy for Russia's development. It's like watching someone playing the first half of a game, implying one strategy, and making a critical shift to a different one halfway through, taking advantage of their opponent's carelessness. It rarely works, but when it does, the results can be spectacular. Game, set, match, Putin. Now that is something else. That's on another level, folks. My client brought this to my attention. I was just like, what? This is on another level for sure. So this is what we're dealing with. We're dealing with chaos. We're dealing with blood in the street. This is what we're dealing with. This is what we're dealing with. So it makes a lot of sense, a whole lot of sense. And it pretty much, verifies what I was telling you guys last night. So the question is, where do we go from here? Where do we go from here? I'll tell you where we go from here. Straight down. That's where we're going. And as I'm talking to you, we're getting worse. We're about to take out the overnight low in the crude oil futures. We're about to hit that down $3 level right now as we speak. This is what's up. So get ready. Now, I did not see 99 cents a gallon at the pump last week, and we should have. They did bring the prices down, but not by a whole lot. Remember, that was one of the things that I told you guys. What up, William? What up, man? What up? This is one of the things I told you. I said, if this is definitely, if the markets have become weaponized along with the coronavirus to give the U.S. that 1-2 punch knockout blow. And that's kind of what you see happening. Because they're not, the savings are not being given to the public. Crude oil prices have collapsed so much that we should be seeing 99 cents at the pump. We are already trading at 1990s levels. This is the 1990s level when gas was 89 cents a gallon, 99 cents a gallon, 79 cents a gallon. I remember those prices. Those were 1990s prices. Why aren't we seeing that now? We should be seeing that right now at the pump. Because as we already know and has already been demonstrated, the pump prices do ebb and flow with the crude oil prices. If crude oil has a steep decline, the prices at the pump come down. If crude oil has a sharp rally, prices at the pump go way up. But we're not really seeing those savings trickling down to the public. Do you know that Occidental Petroleum is down 20% right now in pre-market? They're down, and we're not seeing, where's my 99-cent gas, man? All right, I need my gas, okay? All right, now let me be serious for a quick second because we're about to hit that opening bell right quick. For those of you that are in the market right now, please have your stops ready. Please prepare for what's called fast markets. Remember what I told you. You got to be careful. You got to trade these markets because that's how we make our money, but you got to be smart and you got to be prepared for the type of markets you're going to see. We already have fast markets right now in crypto. We already got, we're going to have fast markets in equities. Okay, there's the opening bell right there. We just got the opening bell. Here we are. The Dow is now down 1,504 points on the futures and down 2,250 points in the cash market. And the NASDAQ is down 519 and a half. S&P down 182 half. Russell down 84.8. Bitcoin now down $825. Crude oil down $2.70. So here we are. All right. And when I say here we are, it made me think of that one of my favorite scenes from Good Times when Thelma was getting married and they were singing that song. Here we are. Right before Thelma's husband clipped over JJ's foot and hurt his leg. So here we are. Marcus about to trip and fall down and break his leg. This is where we are. All right. Circuit breakers are definitely turned on. We are paused right now. All right. We hit the first circuit breaker. We opened up at circuit breaker. This is where we are. Yeah, that was his name, Keith. Somebody help Keith. Keith is down. He's down. He is down. Help your boy. Get your boy. All right. CNBC reports the S&P 500 cash index is down 8.14%. So we are now in a 15-minute timeout. All right. We are in a 15-minute timeout. I cannot stress this enough. All right. Things are not looking good. Not looking good right now. All right. But they are for the post waivers because we're loving life. Because we've been shorting where there is time to be short. And we've been long when it's time to be long. So we're loving life. Now I need y'all to pray for me now, okay? Pray that there's no shenanigans. All right. Pray that my DUGETF continues to rise and make me money. All right. Crude oil futures down now $3.30 and falling. We're at the lows of the session. We just took out the overnight. Oh my goodness. Fast market. Crude oil is now on the fast market. We just hit 28.10 and bounced back to 28.35. Fast market. All right, folks. This is what you do. This is what you want to do. For those of you that are in profit right now, right? Move those stops. But be careful. Do not panic. Do not use market orders this morning. Do not use market orders. I repeat, do not use market orders. All right? Don't. You never use market orders in fast markets or you will get your face ripped off, pulled all the way back to the white meat. You don't want that. What you want to do is use stops and limits. You can use a stop, you're going to be all right. You can use limits, you're going to be all right. You can even use a stop limit, but I wouldn't because it's a fast market. Markets can jump and skip over your price. Just stay calm. Enjoy the sweet sounds of the cash register ringing and be prepared to get out and take profit. You can't be greedy. All right, so right now we're halted for 15 minutes, okay, because of what's happening on the stock market. Now, this is interesting. I was told that the trading floors were going to be closed to human beings, that we would only have electronic trading, but yet I see I see my homeboys here at the New York Stock Exchange. They there. They got their jackets on. They sitting around talking, chilling. I don't know what's going on. I thought they was going to send everybody home and tell them to work work at the computer. So I don't know. I don't know what's going on with that one. I'm sure the Chicago Mercantile Exchange will be closed because they already mentioned that. And I know Ira Epstein was on. He was on there on Bloomberg, I believe, and he already had stated that he wasn't coming in. He was going to be at the office, or they would do their interviews at the office and not on the floor. So yeah, I know my peoples that I know personally. They're not going to be going in. Not today. They're not coming into the office today. Now the trade desk, I don't know how they're going to do that. Probably just figure that out. I don't know how that's going to work. So, but those phones still got to ring and they still got to operate. So I don't know how they're going to do the trade desk. I know when I ran a trade desk, obviously you're not dealing with the public face to face, so you can still handle that. But yeah, anyway, all right. So silver is looking a little bit better right now. As you can see on the screen, silver is right here. Silver right now is down $1.81. We were down over $2. We're down $1.81 now, $1.83. We're at $12.66. All right, this is a low we have not seen in a very, very, very long time. Very long time. All right, this is interesting, folks. It looks like because stock trading is halted, that includes your ETFs. So the ETFs are frozen also, and that includes the ETFs that trade the commodities. So DUG is halted along with DIG and TLT, all the other ones. They're all frozen right now. They're not moving. Some of your commodity futures are trading, obviously, but anything that's stock related is not trading right now. All right, the real-time ticker, we got 9 minutes and 38 seconds before the market can reopen. And it's looking like it's going to be a doozy because the market's opened up down more than 7% on the open. So it's looking really bad on that one. All right, so let me bring some context to what's happening for you guys. What you're seeing right now is what I was telling you last night. If you guys missed last night's emergency broadcast, you probably want to do yourself a favor and listen to that. I dropped a lot of nuggets for you guys on that. And of course, every time I do this stuff is unscripted, but we went there. We looked at charts. We talked about certain markets. We did a lot. We did a lot. Okay, someone has a good question here. Let's see here. Why do they even have circuit breakers? Isn't that anti-free market? That is a really, really good question. And it has actually a pretty good answer. All right, so like we discussed last night in our market segment last night, we were talking about, the way the markets are designed and set up. To some point, the markets have to be managed, not manipulated, but managed. Circuit breakers are indeed important, even in a free market, because it allows calmer heads to prevail. It's meant not to have things just fall apart. And not to mention, it serves multiple purposes. The other purpose it serves too is to not clog the system, because with since we've gone all electronic, we're using Globex in Chicago, we're using the NASDAQ level 1 and 2 levels and all that. You don't want the machines to get overwhelmed. So these circuit breakers help that. Now, don't get it twisted. The auction order routing mechanisms within these systems work very well, but they can, and have in the past been a little bogged down, had little issues, but for the most part, most of those kinks have been worked out. But the circuit breakers are there for a purpose, and that's what that purpose is, to allow calmer heads to prevail. It also helps in case, let's say, God forbid, Wall Street was hacked and someone was bringing these markets down. Wouldn't you like to have those built-in circuit breakers to say time out and to make sure everything is kosher. Check your algorithms, check your platforms, make sure NASDAQ level 1 and 2, that these, the orders that coming in are real orders and not someone, ghosting or trying to manipulate through a dark pool. It gives the markets time to make sure everything is okay, everything's lining up. We got bids and asks. We're doing good. We got price ladders. Everything's looking good. These are real orders, real institutions, real individuals buying and selling, not some type of hack. All right. So this gives all of that time to settle. All right. So it's very important that we have this. Now, commodity futures have had this in place, for decades, for ages. Not all of them, but the majority of commodity futures have what is called lock limit moves. And they have lock limit up or lock limit down, and those limits are set. All right, so your grains have it, your meats have it. Okay, so that's what it is. All right, let's see, got another one here. Didn't they install circuit breakers to the upside on silver in 2014? Okay, now that's a good question. Let me think about that for a second. I think they may have. I think you're right. And the reason for that is that I think gold and silver was one of those that really didn't have a level, because not all the commodity futures had those lock limits or whatever. Like oil, crude oil doesn't have a lock limit. Bonds doesn't either. At one point, if my memory serves me correctly, bond futures did have a limit. It was 2 points. And then they removed that. And gold, I don't think had a limit, or if it did, it was like some ridiculous number. So I think after the 2011 gold and silver bonanza, that's when they went ahead and did that. So I think you're right. I think around 2014 they probably did do that. I'll tell you how they managed it though, even without the circuit breakers. What they did in Chicago, what they did was they kept raising the margins. All right, see, that's one thing that futures has as a benefit over equities. In the futures markets, you have initial margin requirements and maintenance margin requirements, and you also have what is called span margin. This gives the futures industry a lot more flexibility. They can say, you know what, this market right here is too hot. We need to cool it down. So instead of, let's say, $100 to trade one gold futures contract, they say it's now $500. It's $500. Now, if it gets too hard, they say, okay, you know what? 500 ain't enough. It's 1,500 now. And they'll keep doing that. They'll keep raising it and raising it. Excuse me. Believe it or not, the trade like the big pit contracts in the past, the NASDAQ 100, I remember seeing the margin for one contract was like $40,000. I'm not kidding. Some of the futures, like the big pit traded ones, they had just enormous limitations on them, enormous initial margins. So will they ever do something like that for equities? No, because it's a whole different type of a setup. So that's what that is. All right, let's see what else. Let's see. One of my things have stopped functioning here, so give me a second. Don't know what's going on. I'm going to have to close something here. Let me close one of my apps. Hate when that happens. Bear with me for a moment. All right, I think I got it. Okay, we're good. Let me just take a look at this over here. All right, bear with me. Checking a couple of things. Okay, let me close that. Sometimes you got to close things. That's one thing with Microsoft. After they changed everything and made it so that you can't do much, you can't say, I don't want to do the update. They force you to do it, and it sucks. So then I got to go in here and I got to close things down. Like Skype opens up on its own. Even though you say close it, it comes back. It's really whack. So just bear with me. All right, so we're good there now. All right, I see a bunch of questions in here. Okay, TLT. TLT is frozen too right now because of the halt. So it is at 160.56, and it's up $6.62 right now. That's where we are. Hasn't moved because of the trading halt. Once we come off halt, then it'll start moving again. Another good question. Okay. If you have a futures contract open and the margin changes and you don't have the margin, will you be forced to sell the contract? Yes. Yep. When I ran the trading desk, that was one of the phone calls I didn't like to have to make. It's called a margin call. That's what it's called. When you're trading futures, you have what is called initial margin, and then you have maintenance margin. Oh, we're back open, guys, and futures now are down. I'll come back to your question. We're down 2,026 points. We're down 2,100. We're down 2,200. We're down 600, 2,300. We're down 2,300 in the Dow now. Down 666 in the NASDAQ. Down 296 in the S&P. We're down 2,400 points now in the Dow. We're down $3.07 in crude oil. We are down 2,500 points in the Dow. Stop the market! Close the market! What are you doing? You're letting it collapse again. Stock halted from trading. They have to halt it. We're down 2,600 points. What are you doing? Yo, this is crazy. Really? Y'all doing it like that, son? You letting this thing collapse? Good grief. I can hear Mortimer right now. Instead of saying, turn those machines back on, he's saying, turn those machines off. Turn those machines off. What are you doing? Yeah, this is carnage now. This is panic. This is not, we broken last week's record now for point movement. We were down 2,600 points in the Dow. Straight like that. Straight like that. Good grief. 2,700 point drop in the Dow. Ow, ow. That hurts. Yeah, y'all. All right, let's look at some things here. TVIX is up $116 today. Good grief. Good grief. Man. That the volatility things are going through the roof. Silver is back now down $2.07. Good grief. They won't leave him alone. You're hurting him. Leave him alone. Leave him alone. Stop the fight. Stop the fight. He's not gonna make it. Man, they are just having a field day today. I'm telling you, man, it's the robots are like, you know what? We up out of here. We ain't staying up in here. We bouncing. We are out. We can't hack this. We can't take it. We can't take it. Can't take that kind of punishment. It's too much. It's too much. No one can survive that. Right now, the market is Leon Spinks. And the price action is Mike Tyson. And he is punching his head off, completely off his shoulders right now. The Dow cash is now down more than 2,749 points. The NASDAQ is down almost 1,000. We're down over 900 points in the NASDAQ. All right, you know what? I got to tell y'all something. You're not going to believe me. You're not going to believe me. The price action that we're seeing now reminds me of 9/11. Yes, it does. It reminds me of 9/11. On 9/11, I told you things happen. Now remember, the markets were at their infancy back then. So we didn't have the things we have in force now. Globex was still a baby. And everything just went bananas. The British pound was like 10,000 pounds to a dollar because the dollar went to zero. Absolutely incredible. That's the kind of price action we're seeing right now. Just mind-boggling. Euro yen is now down 254 pips. Absolute carnage. Don't you love it? All right, hold on 1 second. I need to do something real quick. I need to move my stop. You know, it comes a time where you have to move your stop. You have to move it to either break even or you roll the dice and say, I'm trying to get some profits up in here. So let's see. I'm gonna have to move my stop. I don't like the way that price action is kind of like just chilling. And I did see it go a lot higher than this too. It's not really giving me a whole lot. I would think that it would be a lot more than this, you know, like a lot more, just a lot more. And it's not giving me what I want. Now, you guys saw me do this last week. I didn't like the way that the DXD was moving, and I had to run. So what I did was I went ahead and I had to move stuff. I had to move stuff around. Well, that's what we're doing right now. We're about to move stuff around. Got to. All right. So let me check. Oh, I gotta check something else. Hold on before I do that. I gotta check one other thing real quick. All right, so 819. Interesting. All right, we're gonna keep it there. Okay, I'm moving my stop now. Right now we're at 135.80. We're stuck at 135.80. So I'm going to put it to, where should I put it? I don't know. I know not. How about I know what I'm gonna do. Let me see here. Okay, I'm going to move choices, decisions. All right, first and foremost, I need to get out of some stuff. So hold on. Bear with me. I need to cancel some stuff. So allow me to do that real quick. Canceling stuff that has not met. I mean, if it's not going to hit intraday price inflection point after all of this, yeah, I gotta pull the plug on some stuff. All right. So now let's see here. All right. I don't like the way it's moving. It's moving funny. So we're going to move to 135 even. Sometimes you just got to do that. All right, let's see here. Okay. Looks like I'm done. Sorry for the silence. Just hold on a second. Gotta check this out. All right. Looks like I got my price. I'm out of Doug now. Okay. But I don't like the way this other thing is moving either. I'm going to watch it for a minute. Bear with me. I need to look at one other thing. Yeah, I'm out of this. I'm out. Bear with me. One thing you're going to learn to do too is cut your losers. You got to cut your losers and you let your winners run. It's just what you have to do at times. And that's what I do here. All right, I'm flat now, folks. I'm flat. I took the money and ran. That's just what I do. I take the money and I run. I take what the market gives me, and then I say, peace. Nice doing business with you. Okay, so back to answering this question. All right, so when you're trading futures, you have what is called initial margin, and then you have maintenance margin. Initial margin means that this is the amount that you have to have in your account to initiate this trade, to put on the trade. And then after that, if you want to hold the trade overnight, then you have what is called your maintenance margin. So those are the two different types of margin when you do that. All right, so you have your maintenance margin to hold it overnight. Your initial margin is what it costs to put on the trade. Now, if you're trading with options, like you're doing some wild things like butterfly spreads and iron condors and stuff like that, then they're going to hit you with what is called span margin. Span margin, you will not be able to figure it out, so don't even try it. It's a complicated formula that they come up with to decide how much you have to have in your account to put on the trade and hold it. All right, and that can adjust every day. And normally the rule of thumb that we would always have would be you need to have at least whatever it costs for a full futures margin, and a half or times two in order to put it on. That would always be like a safe thing. If you got initial margin times two, you're good to go. Or maintenance margin times two, you're good to go. So that's normally the way that we would do it. All right, we got my man Mark in the house, and we got my man Frank in the house. What up? And we got my man William in the house. What up? What up, peoples? All right, my man Mark makes a very good point. Watch out for the PPT. Yeah, man, yeah. I just don't know, man. I mean, here's my thing. They made that announcement last week saying, yeah, we're gonna PPT our way to victory. But they said they were gonna do it every Friday. Remember, they're gonna spend $1 trillion every Friday up until like the end of March or whatever. That don't mean nothing. I don't buy it. Because why did they let the market fall almost 3,000 points this morning? If we got a PPT, what's up with that? Now, I know some of you going to say, yeah, but didn't we just bounce? Weren't we down 2,700? Now we're only down 2,200? Nah, you don't get it. If the PPT really had their computer turned on right now, we will probably be up and green on the screen right now. We wouldn't be down 2,000. We'd probably be up at least 1,000. I've seen PPT take the market from absolute disaster and turn it around and have a monster rally at the end of the day. Like turn on a dime. But I'm not seeing that right now. I'm just not seeing that. So the answer is no. No, I don't think so. I think what you're seeing right now is a lot of people listening to this broadcast who were short in the market this morning, and they're saying, you know what? You don't look a gift horse in the mouth. Let me go ahead and take this money and run. Because what do I always tell you guys? I tell you that you never go broke taking profits. You will never go broke taking profits. All right? I just took profits this morning, and I'm loving life. I feel like that one scene in Martin when Tommy was like, I found $50 just laying on the ground, waiting for me to pick it up. Hot darn, and he jumped, and he did that thing when he clicked his feet. So anyway, I know I'm just clowning, but no, for real talk though. The markets are bucking right now. I think that's obvious, right? The markets are bugging. So it is what it is right now. You guys, if you don't see any other way, then you got to do what you got to do. You know, just do what you do. Just make it happen. That's what it is at the end of the day. We make things happen. We do what we got to do. Okay? All right. So what's the next step? Well, we're going to watch it. We're going to watch and see what happens. Bitcoin has recovered too. We went all the way down to 4,390. Now we're at 4,820. All right. So markets are kind of turning around. It's 10 o'clock. We got 30 more minutes where we could see some carnage. And if we don't see any more carnage or revisiting the lows, that means the range has been established for the day. And you probably, more than likely, will not see any more selling. I know you're going to say, oh, I know y'all want to see some more selling, but I don't think we're going to see any more selling. Okay? I think that's pretty much it right now. Normally, the first hour of trading is when the market normally is either going to make the range for the day, or either that, or you're going to make a decision for the day. So I think right now we're looking at range for the day. I don't think that we're going to come back down and visit those lows, but hey, you never know. We might. Anything's possible. It is, a sort of Black Monday, if you will. We just got to watch and see what happens. You got to be smart in these markets, folks. You just got to. Let's see, we got another question. How much did the market tank this morning? 2,700 points, 2,700 points. The Dow fell. Not a joke. Real talk. Cash markets just gave it up. Almost 2,800 points it fell today. The futures was right there with it. Just to give you an idea, the type of trading range we're looking at. The high this morning was 22,708, and the futures low was 20,181. All right. That's the trading range that you saw today. Not a joke, real talk. All right. So sometimes the markets move so fast that it takes a while for the quotes and stuff to update. And we haven't seen that yet. Remember last week when we were looking at my chart and the charts weren't updating at all? They were like frozen, but the quotes were still working. That happens. Now, notice how before the opening bell, I warned you. I said, you guys get ready because we're going to have fast markets. And what happened? Market open. We had a fast market. And prices was moving all over the place. Like literally. So now you know. Now you know what time it is. Now you know how things move. We could see some interesting developments later today. We're not out of the woods, not by a long shot. The day is just beginning. Like I said, we got until 10:30 to decide, are we going to range the rest of the day, or do we have more carnage coming? Do we have market closing developments? All right, so based on what I see oil doing, oil went down to $28.10 and did not break that. We've now bounced up to $29.15. So we got a full dollar rebound off of the low in the oil this morning. So that's telling me that there is a possibility that we are now nearing a low in the oil. We may not hit 25. This may be it, or pretty much near it, if you will. So I'm really believing that this is where we are. Now, only time will tell. We'll see how the markets close. Remember, today's close of the markets are going to be extremely important. All right. Very important. All right. Because turnaround Tuesday will be upon us. And the question that everyone's going to have is, are we even going to see a turnaround Tuesday? Is that even possible based on what we experienced so far today? Those answers will be upon us. We don't have them yet, but they will be upon us. And we'll have to find out what the market's made of. If you were short the futures coming into today, you're gonna need to move your stops, and you're gonna need to lock in some profit, just in case the PPT does decide to show up. You're not gonna want to be standing in front of that freight train. Okay, just so you know, you don't want to do it. Yeah, JNUG is up $1.19 now. It's at $5.66. So you're trading at $5.66 in your JNUG right now as we speak. Markets took it on the teeth today. They took it on the teeth. Now, the intraday price inflection points, I'm going to pull them up right now and let you know where we are, where I would like to see us today. And then you can also know that there's probably not a chance in four worlds that we are going to see this, but I figure I'd give it to you. All right, here we go. All right, so we got on the Dow futures, we need a close above 23,244. I'm giving you PPT intraday price inflection points. All right. This is PPT intraday price inflection points. So if the PPT is really going to come in, this is what it's going to have to do in order to put in a short-term bottom. Y'all ready? Here we go. And also, this will also create massive bearish pointers on the market. But this is what they need to do. If they're going to stop this today, I'm going to tell you what the price levels are for them to stop it based on this morning's price action, based on what's happening in these markets. Y'all ready? Here we go. The Dow futures needs to close above 23,244 today. Gold futures needs to close above $1,610 today. Now, as I'm giving you these numbers, you can see how ridiculous this is. There's no chance in four worlds that this is going to happen, but I'm giving it to you anyway, just in case, because you never know. Anything can happen. Silver's intraday price inflection point is not as devastating, but still is $16.15. Even the S&P 500 is 27.01 3/4. Let's see. We got the NASDAQ 100 is at 78.55. Not going to happen. Crude oil is $34.22. All right. And for the euro yen, unfortunately, its number is setting here at 118.26. Now, here's the funny part. It's looking like the euro yen can actually do this. 118.26 will actually set the door wide open for the euro yen to rally tomorrow, and it could rally quite strongly. So this is going to be interesting. GLD, gold, the GLD, it needs to close above 150.82. All right. The OIH needs to close above $5.01. The QQQ needs to close above 192.49. SLV needs to close above $15.02. And soybean futures needs to close above $8.64 even. The SPY needs to close above $270.66. TLT needs to close above 160.46. And it's sitting right there where it can actually do it. Excuse me. UCO needs to close above $5.89. USO needs to close above $7.19. UUP, US dollar index, needs to close above $26.50. And so far it is at $26.60. So it's right there where it can actually rally tomorrow. And the XLF financial sector spider needs to close above $22.83. All right. So now that's the raw intraday price inflection points. Like it, leave it, love it, doesn't matter. That is what we need to do today. Now, some of these have a good chance to do a little something today. The other ones, not how they say it, happen, not gonna. So with that being said, unfortunately, I have to report, because it's not gonna happen, that you can expect further carnage tomorrow. Now, what you will probably end up seeing tomorrow for Turnaround Tuesday, if we get one, we'll get some sort of a rally, but it won't be near as powerful as today's downside move. But we have a couple of caveats. I've been watching the price action. We got a couple of caveats where tomorrow's intraday price inflection points that I just gave you can be reached. So if we get a close above any one of those today, and then we bounce and rally tomorrow, then today's intraday price inflection point will carry over to tomorrow, meaning that the market still cannot close below that even going into tomorrow. If it does, then we're looking at another leg down by the end of the week. And just so you can understand that, that means that 2,800 is going to be taken out by the end of the week. All right. Next question. Do you see physical gold and the paper traded gold price decoupling? Nah, because the paper market determines the physical market. Unfortunately, that's the way it is. So everything it goes by the gold futures price and the gold spot price. Gold futures and gold spot are married. Okay, they are married, and that's always going to be. Your spot price and your futures prices are always going to be pretty close. Sometimes there's a discrepancy. There's a little difference there. But for the most part, they move pretty much together. Any gold coin place you call up, I don't care if you even call APMEX, they're going to get their prices based on the spot and or futures price. And really, they're going to go by the spot, and then they're going to add the premiums based on the futures. So gold spot physically right now is at $1,300 an ounce on gold, and the futures is at 1302. They're going to use the difference between the 1300 and the 1302 as their premium to charge you for the gold. It's the way it is. I don't know if you guys have noticed that or not, but that's pretty much the way they do it. So a lot of times when they see those premiums being marked way up, that's usually when the market is really on fire. And it also happens when the markets are collapsing like today too. And, all right, Sam just made a good point. He said the bullion dealers are sold out. I'm glad that you brought that up. I'm glad you brought that up. Because here's what a lot of people think. They think, oh, you know what? If gold crashes or silver crashes, I'll back up the truck and buy more. That's assuming you can even locate it. Normally, when you see this situation like this happen, people are coming in and they're hoarding. They're snatching it up, man. So you're going to be hard pressed to even find and locate anything. So that's one of the caveats to this. It's like a catch-22. Yeah, it's cheaper, but it's going to be hard to locate. And when you do, the markup is going to be absolutely insane. So you're not really saving anything in that regards, if that's what your goal was. It's just crazy, man. We're in crazy times. We're in crazy times. But this is the best time to be alive as a trader, though. If you are a trader, this is your time. This is your moment right now. You are loving life because you have the opportunity right now to make insane profits and returns that you normally would not get. These are gifts. These kind of market movements are gifts. And we just normally don't see price action like this. And we probably never will again in our lifetime. Like I said last night, this is that moment that you'll be able to tell your grandkids and great grandkids about. Think about all of our grandparents that were alive, and great grandparents during the 1929 crash, and those who lived during the Great Depression. Remember their stories and stuff that they told you? Yeah, I was there. I remember when that day happened and this happened and that happened. You'll be able to tell your grandkids about this. All right, someone just wrote, $5 over spot. See, that's what I'm saying. That's what they do, man. That's how they get you. That's how they get you. That's how they get you. So this is unprecedented waters that we're in right now. The Dow is now down 30% from its all-time high. 30%. They say 20% means you're now in a bear market, right? Nah, not technically. We've been in a bear market. They just late to the party. All right, those who been watching this channel, I told you when the short-term top was posted, and I've been giving you guys the bad news ever since. You know, it was hurting my heart to tell you that Bitcoin was going to go to 4,000. You know, it hurt my heart to tell you that. It hurt my heart to tell you, hey, man, if you don't get out of Bitcoin at 20,000, you're going to regret it. You know, I try to. You can only warn people and tell people but so much. At the end of the day, they're going to do what they want to do. They don't care. They're going to do what they want to do. So that's all I do. I just try to, let people know what's going on and give them the what's what. That's all I can do. So anywho, that's where we are right now. Things are moving. Things are moving and shaking. I think that by the next 15 minutes, it's going to tell us a lot that we need to know. The market right now, I don't like it from a PPT perspective, meaning that if you are looking to find a place to get long, perhaps, and play a bounce, I don't see a bounce coming. The reason why I'm saying this is because we've been hovering down over 2,000 points, and we're not really budging off of that. Yeah, I know it's not 2,700 points, but to be down more than 2,000 points like this and hold this and not come up anymore, yeah, that's a problem. That's a problem. Like, for real. That's a problem. So you got silver now down $1.95. All right, it's back down. It's falling back down toward the lows of the session. So far, here's what we got. We got the low is $11.77. And right now we're at $12.54 in your silver. Your gold, we went down to $1,450.90 an ounce. And currently we're at $1,468.50 an ounce. All right, so that's where we are right now. So, we've come off of the trading halt. We opened up down 7% in the stock market today. And now this is where we are. All right, so someone's saying, shouldn't that be silver at $22 in real terms? Nah, not really. See, here's the problem we got when we talk about precious metals and specifically silver. Silver is complicated. It's sort of like the US dollar. It's very complicated. You guys have heard me tell you in the past that the makeup of the US dollar and how they derive its values and stuff is very super complicated, and most economists can't figure it out. Silver is kind of complicated like that too, because silver, it's a commodity, but at times it acts like it's a currency as well. All right, it's an industrial metal. So it's going to move and be complicated. It's going to really be a supply and demand issue more so than gold. All right, it's going to be like soybeans. Silver's going to be like soybeans, but it has a little thing and attached to it that makes it also at times look like and act like a currency. Don't get me wrong. At the end of the day, gold and silver is money and nothing else, right? But it's an industrial metal, but it's also a currency. So it's going to act and have two personalities, sort of like your gold mining stocks. Gold mining stocks have a split personality because on one hand, a gold miner is still a stock, still an equity. So it's going to be, influenced by acting like one. All right. So it's going to have to be concerned about interest rates. It's going to have to be concerned about debt. It's going to have to be concerned about all the things that stocks are concerned about. But on the flip side, because it's industry, the thing that it processes, produces, manufactures is gold, which is a precious metal, which is a currency, it gets a boost from that performance. So good case study. Take a look at GDXJ today, right now. All right, it's right here on the screen. Right now, we're we're one of the few shining spots in the market right now because it's up 22 cents. All right, currently trading at $22.39. We hit a high today so far of $23.33 and a low of $19.79. Okay, so it's green on the screen right now. Even though gold is down heavy today, even though the stock market is down heavy today, your question will be, so then what is the gold miners, what is it benefiting from? And I'm glad you asked that. It's benefiting, remember what I said, the gold miners has a split personality. It's a stock, but it also benefits from what it trades in, which is gold, which is a commodity, but it's also a precious metal, and it's also a currency. Excuse me. So what it's benefiting off of today is not the gold price. It is not benefiting from a low gold price. All right. Gold miners do not benefit from low gold prices. Gold miners do not benefit from a strong dollar either. Gold miners benefit today. It's loving life. They're celebrating, high-fiving because of interest rates. That's what is helping out the gold miner. Remember, stocks like low interest rates because they can borrow cheaply. All right. All right. My man William said the gold miners halted, and he's talking about NEM. Oh, NEM is halted, really? Wow. Wow. They're halting the miners today. Okay. Today is a strange day, folks. It's a strange day. Well, yeah, I see GDXJ now is up 81. It just hit up 83 now. Yep, up 83 is now trading at $23, just 33 cents off of the daily high. So it is moving. And JNUG is now up $1.23, trading at $5.70 a share. So your miners are benefiting today off of this this movement. So that is one of the bright spots today as far as a long equity position. Another long equity position that's benefiting today is HDGE and SJB. Both are up respectively. Your HDGE is up 65 cents, trading at $7.36. It did hit $7.95 today before pulling back. SJB is up $1.53 at $23.80 right now. It was up as much as $24.40 before it pulled back off that high. So those are two bright spots. Now, your HDGE benefits and goes up when the market is falling. Now, Swan is supposed to also, it's down 59 cents at $28.50. So, it's not down as much as it could be because it's considered the Black Swan ETF. Another bright spot today is Clorox, up $6.88, trading at $174.65. So that's a bright spot, and that's it. Out of the COVID-19 stocks, like Colgate, American Airlines, MTA, Zynga, INO is down heavy. APT is down heavy. That's the only bright spot in your COVID-19 stocks today. So that's where we are, man. All right. Question here is, do you think now is the time to start accumulating junior mining stocks? If you can find some at a good price, yeah. Now, see, my advice with the mining stocks is sort of like, it's different because you got miners out there that are like penny stocks, literally. You can't really get hurt with buying penny stocks. They can only go to zero, but if it's already trading at a nickel, okay, you lose 5 cents. All right, so what? So that's going to be up to you. If you can find a good deal out there, go for it. If you are a PulseWave subscriber, I would say stick to the PulseWaves. and buy according to the pulse waves, and you should be okay. If you're a long time holder and you got a portfolio of mining stocks, again, there's a lot of things you can do in a down market. If you are holding an equity that has a robust options market, there are things you can do to be all right. All right, breaking news. Major retailers closing U.S. stores amid outbreak. Wow. Yeah, so it just depends, man, my man. If you got, if you're looking at some miner that's a penny stock, I mean, don't go broke. Don't spend your rent money buying it because it's trading at 5 cents. Buy what you can afford. Yeah, go ahead and do that. You're not hurting anything. It is what it is. You know what I'm saying? So let's see. Next question. Is this a concern? The silver gold ratio is hanging around 115 to 120. How long will that last before it blows? Heck, if I know, man, I'm not even going to front. I don't really put a lot of emphasis on that silver gold ratio, to be honest with you. I don't. I just follow the actual prices of the individual markets themselves, and I study that price action. Gold silver ratio, I really don't have any concern with. It's nowhere in my algorithmic processes at all. So, all right, someone says here, comment, gas will never get to 99 cents due to tax, state, and federal tax on it. Once again, like I started off saying in the beginning of this live broadcast, this is an attack against you, the American people. Let's let you know how much they really care about you. All right, let's see. One more question. Do you recommend holding cash on hand in case of credit freeze? Absolutely. You should always have cash on hand. You should only have in the bank what you need to pay bills, but everything else should always be cash on hand. Always. Cash is king. Even in the Weimar Republic, if it takes $1 billion to buy a soda, I'd rather have that $1 billion if I'm thirsty than to not have it. So yeah, cash is king. All right, let's see here. What's that? Cascadero Copper TRX, ticker CCD. Let me take a look at that, see if I can find that. Give me just a second. Ticker CCD. All right, let's see. We'll see if I got it. Yep, I see it. Yeah, this one has fallen on the weekly as well. This one's been taking a beating as well. If you are long this, it is, I don't know. It's looking like today's rally could be sold. You also have a gap that was created on this one on the daily chart back on March the 12th. So if anything, it may fill the gap. But right now, I got to say, it's in a bear market, man. It's in a bear market on that CCD. All right, man. Will says March 2020 equals October 2008. I see metals miners will rebound strongly in second half of 2020. Yeah, that's a good point. You know, we talked about that last night too. The comparisons between now and 2008. I call today, you know, the financial crisis 2.0. All right, in my state, in federal tax per gallon is 61.30. Good grief, that doesn't make any sense. See how they hurting you? They don't need to be doing that. All right, how does Tezos XTZ look? Let's see. Is that a stock or a crypto? If that's a crypto, I do not have access right now to that. Yeah, I don't have access to that right now. Not on the cryptos. All right, let's see here. Do you like any altcoins or just the big names, i.e. Bitcoin, Ethereum? Yeah, just the big names. I like, I stick to the big names, the Litecoins, the Ethereums, those. Yeah. Ripple. That's about it. Let's see here. VeChain, yeah, VeChain is on our list. That's on the PulseWave list. Nope, no link yet. No link yet. Still working on the link. I did start building a database for it, but I'm not prepared to launch that at this time yet. I'll keep y'all posted though when I do add to the list. All right, I want to purchase my first Bitcoin future contract. Should I buy it today or wait? If you are a member of PulseWave Trading, you have to wait for your price inflection points. Follow the system. Follow the system. Don't be over anxious. The market ain't going nowhere. And when it does move, you'll be in a good position to move with it. My man Frank says another big win with Bitcoin contract last night. Oh, that's what I'm talking about. Way to ride those post waves, man. Ride them post waves. That's how we do. That's what we do, and that's how we do. All right. One thing I want to say is we have a bunch of content, like I told you at the beginning of this broadcast. It's going to be on the website today. A lot of seminars and learning material. So just wanted to let you know that. You want to go to PulseWaveTrading.com, sign up. We got 3 webinars this week on our homepage, and that's where you sign up at PulseWaveTrading.com. Also, I know I've been talking for a long time. My throat is parched. I'm thirsty. I think I need to head over to PulseWaveTrading.com and get me a 6-pack. I know you've been hearing me clear my throat, so I'm gonna go get me a 6-pack, and I would love to see you guys over at PulseWaveTrading.com. You can register with us. We have a free account with some free giveaways for you. This is our way to say thank you and welcome aboard. And then when you're ready to take that leap, go ahead and get that 6-pack. Right now, we got a special for all of our YouTube listeners, $69 a month. That's it, to get the most powerful trading methodology in your hands. All right. And with that being said, I'll see you guys back here for the end of the day report. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And that means take whatever profits you can extract from the market and don't turn it into a losing trade. I'm out. Peace.